Well, good morning, everyone. Today is Wednesday, the 22nd of January, and we're in full earnings season. We went from financials, and now we're moving broader and broader and broader, into other areas of the financial. As far as reports today, we've got existing home sales. It's an interesting report to watch because housing starts about 2 weeks ago were out of this world. We had about 200,000. I'm not kidding. We were expecting like 1.4 million. We had like 1.6 million. So existing home sales is a very interesting report to watch today. I want to see what happens, want to see how things go, and want to see which way the economy goes. Again, consensus 5.43 million. If we're within this range, I'm not expecting anything major. It's not the biggest report, but it's something to watch, especially with low interest rates and with the housing market expecting to go south this year. Actually, I'm expecting the housing market to begin really moving south this year. But anyhow, let's talk about the general economy. Utilities have been leading, and they are as overbought as you can get. The fact that utilities are leading is not very positive. This is the most defensive sector that we have. So out of the 10 major sectors, seeing defensive sectors rise when earnings are so far better than expected. We had IBM yesterday. It beat expectations. We had Netflix yesterday. It beat expectations. We had United Airlines, I believe, as well, and it also beat expectations. So today we got Abbott Labs, Ally Financial, Citrix Systems, Johnson & Johnson, and Texas Instruments. So we're definitely going into the broader view. I'm not expecting the market to be driven as much by earnings as things are turning focus more towards the impeachment. Believe it or not, the market was not focused on it at all, but right now, with the defensive sector rising, it looks like the focus, especially the last few trading sessions, and especially with the volatility moving up, is focused on the impeachment, and I'll keep you posted. So far, again, I don't think this thing has legs, and I honestly think this trial is already over before it began, wink, wink, but who knows? Politics is something else. Let's take a look at the major stocks coming out with earnings today so I can give you a good idea of technically where they're looking. So we got Abbott Labs trading above the 50-day moving average, trading near all-time highs, overbought, but still has some potential momentum. I don't like the fact that volatility is higher prior to earnings, but that's not so unusual. And the health sector and the biotech sector is fairly stable right now. I wouldn't say it's as vulnerable as utilities. So not a bad stock. We'll have to look at earnings. Slightly overbought, but may have a little bit of upside left. I would prefer to see the stock near the 50-day moving average on this bar right now. But these three bars looks to me like it's pricing in earnings, but what do I know? We'll have to see what happens today. Ally Financial, trading below the 50-day moving average, not a large cap bank stock, been struggling most of 2019. Can't really get any major movement above the moving average. I'm actually looking to short this stock. It's not looking good at all. I'm hoping that earnings will be slightly better than expected and that it'll come to the price period like a little bit above the 50-day moving average and then maybe even gap up. And then as soon as it touches the 50-day on the way down, I'm shorting this sucker. Unless the numbers are just fantastic and the world changed. And I don't think that's happening, not even close. So that's Ally Financial. Let's look at Citrix Systems. This is one of my favorite stocks. It has a lot of competition, especially last year and this year. This company uses the webinar system that we used to use for our systems, but we switched to Zoom because Zoom is better. Yes, it's better. Although Citrix Systems has a lot of loyal followers, they're changing their systems around. And as far as the company, it's just rocking and rolling. I got to take a look at see their products again because something's going on. They're bouncing off the 50-day moving average. They're moving up. I love the fact that volatility is not increasing. Notice the trading range is it comes back. You're not seeing those wide range bars, narrow bars. That's important, and that's telling me there's a good chance price action can go a bit higher. Although right now, because we've had this upside from 112 all the way to 117, it might have already priced in earnings. Always watch out for a run up or down immediately prior to earnings, because a lot of the times that'll take into account what's to be expected. Also, we're seeing overbought price levels and we're seeing divergence. Actually, I'm not sure if we're seeing divergence. Let's take a look. Let's take a look if we're seeing divergence. No, we're not seeing divergence, actually. I thought we were seeing divergence, but we're not. But either way, we're grossly overbought. As you can see, RSI is at 81. Anything above 70 in my book is grossly overbought. And the RSI is not a sensitive oscillator. It's not like the stochastics that can go up and down. So if this thing rises and it causes the RSI to move up, that's meaningful. So might want to wait for a pullback, but I really like this stock. I like it a lot. Don't know how the numbers are going to come out, but so far it's looking really good. Let's look at a monster, Johnson & Johnson. I usually use this name for my webinars. I explain how it's diversified in many different sectors, how it's not impacted by China as much. It's got so many different products that it's a true, in its word, conglomerate giant. So again, overbought. I like what I'm seeing. It's looking very similar, actually, to Citrix Systems. If you look at these two, they're not all that different. Again, slightly overbought. The sector has been fairly defensive all year. I like it. I would wait for a pullback. I don't think you're going to lose any upside here by waiting for a little downside to the 50-day moving average, but I love the stock. What I'm nervous about is the run-up it's had. It's had a massive run-up, so I would wait for a cool-off period before moving in. And finally, Texas Instrument. Keep in mind, chip stocks have been doing really good. It's hovering all-time highs. Now, what's the difference between this price action and this price action? Notice it's trending directionally. So it lends itself to overbought levels quickly, you see. But when something congests, see, this is more of a congestion pattern. And look at what happened. This is actually a great example. Stock market makes highs, RSI gets overbought, and then it doesn't go down. It just congests. That congestion is like a hibernation stage and allows the stock to cool off, and it allows it to go higher if numbers are good. So I wouldn't call this stock overbought because of this congestion range. Imagine you're running around the block, and you stop for 5 minutes. It's not gonna, you're gonna still be tired. But what if you pause for 5, 6, 7 hours? Then you can run again. And that's what we're seeing here. We're seeing this momentum, this overbought level relieved here, but not by prices going lower, by prices slightly going higher. And this is why I say it's always, pay attention to this. There's a good lesson here. This is why I always say it's easy to figure out pullbacks, but it's not hard to figure out market tops, because you can have a situation like this with markets being overbought, and then you can have them still going higher, but at a very low rate, and that will relieve momentum levels. As you can see here, look, price action is higher than it was here, but we were overbought here around December 20th, right here. Let me just go to December 20th so I could kind of see what see it right here. So we were overbought right here, and then we went higher, but we're not overbought anymore. And this is why I say it's very critically important to understand it's hard to pick market tops or bottoms. It's easy to pull pullbacks, but this is difficult. So again, see, we would think right here that the market would top out, and it did, but then it went higher, but the range was slower, and we're no longer overbought. Again, this is a really good lesson of what happens to the RSI if price action continues moving in the same direction but slows down. So I do like this. I like the fact that we're congestion. I like this round bottom pattern. I like Texas Instrument. So I hope that gave you a really, really good review. Now, I've got something important for you. I put together a document. We're still in January. You still have 11 months and 1 week to take advantage of 2020. I put together a blueprint that will help you double your account in 2020. I'm not kidding. We're already seeing amazing gains from the exact same picks that I said we're going to go. I've been right on the money here. I've included actionable trading ideas. I've included my number one stock picks for the next 12 months. It's all in the doc. Now, this is coming down soon because we're already almost at the end of January, and this is for 2020. So once we get too deep into 2020, this document becomes less and less useful because you get it. So I truly, truly believe that the information that this document contains, that my blueprint contains, will have a huge and positive change and impact to your trading. So let's review. Earnings are here. Retail sales, not retail sales, existing home sales are expected to be something we need to watch. We got utilities overbought. We got a lot of stocks to review. We got Abbott Labs, Ally Financial, Citrix System, Johnson & Johnson, Texas Instrument. They're all coming out with numbers today, and I gave you a good overview, a good broad and a narrow overview on each of the stocks. Check out my blueprint for 2020. It will change your life. It might not change your life, but it'll change how you look at the markets. It'll change how you invest for 2020. And again, I've included my number one sectors, my number one stocks for the next 12 months. It's all in there. It's coming down soon. Follow the link below. Get it now. There's no cost. I'm telling you, it's going to make a big positive impact in your trading. I'll talk to you guys soon. Take care, and don't forget to follow the link below. Talk later.